The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everyone. Today it is February 6th, 2020. So it's another episode of CFRN Thursday where we go over the CFRN trade setup in slow motion. We'll spend about an hour going over the trade setup. We'll get inside a live environment and we'll get inside the market here and we'll show you how to put trades on and take them off and how to manage it using the CFRN methodology. Okay, so before we get started, the game plan really is this. Number one, I'm going to go over the disclaimers, right, because I'm required to present that before we move forward. Two, we'll go over the trade setup. Okay, this is the same setup that Michael is using inside the training room, and it's been around since day one. Okay, if you're brand new, this is going to be a great syllabus or cheat sheet for you to lean on going forward. Okay, I'm going to go over the setup, use some of the buzzwords, methodology, terminology. All that's going to be up here in the beginning. Okay, so when you are in the training room and you hear words like divergence and VBC and separation, you'll absorb what's going on. Okay, so the idea for you guys that are brand new is an eyes wide open approach and help absorb what's going on. So you're not getting hit in the face every 2 seconds and at least understand more or less what's going on. Okay. Usually the guys that have been around trading and stuff like that, they'll understand things quicker. But the guys that are brand new, this is something you can lean on, and again, just help you absorb what's going on while you're during the trial process. Okay, so at the end of 5 days, when your trial is up and you do get an offering from CFRN, at least you can make a decision on whether you want to push forward or not. So that's the second part, and then the third part is we're going to take what we've learned here. Okay, this little setup here, that's the traditional CFRN slingshot setup, and then we'll apply it inside a live market. Okay, I'm featuring the DTPro Trading Platform. Why? Because that's the platform I support. It's the same platform that Michael is using inside the training room, and it's the same platform that Dwayne uses when he's showing you the charts on the radio program. All right, so it's all, there's a common denominator here. We're all using the same charts and stuff like that. Okay, so that's the game plan. If you are a CFRN member and you're here, that's great. It gives you a chance to sit in front of the screens, absorb what's going on, ask questions. I'm going to go over some common traps that I see people fall into as they get rolling with this. And so I'll bring that to your attention. And, sometimes it helps to hear the setup from a different point of view, even a different voice. Okay. The idea is to do it in slow motion so you can understand what's going on. Okay. That's the goal here. All right. During the 1 o'clock, 2 o'clock time period, it's not really busy. All right. So I'm able to do this and answer questions and stuff like that. So please raise your hand. All right. And we'll address it. Okay. It's not a big deal. Okay. So that's the scoop. Okay. So let's start where I need to start, which are the disclaimers. And I know that's not a sexy way to start a webinar, but you know what? As I said earlier, this is an eyes wide open approach, not only to the CFRN method, but to trading in general, because a lot of the guys that knock on the CFRN door, they are new. Okay, so a lot of times you're getting hammered and bombarded with emails from different places that are making crazy promises and crazy returns and telling you how easy it is. But the fact of the matter is they don't balance the reward with the risk. And there is, as this disclaimer says, there's a substantial risk in trading futures. We're dealing with a leverage market. And if you don't have a trading plan, if you're not using a stop loss, if you are not engaged in your trading account, if you are not in tune with what the market news is for the day and what the market's, you're in front of the screens, you're not turning, you turn your back to your trading account, this disclaimer is going to hit you right smack dab in the face. I've been around for almost 25 years, so I've seen really the good, the bad, and the ugly when it comes to trading. So, yeah, I know this isn't a great way to start a webinar because I'm supposed to hypnotize you and tell you how great things are going to be. But the fact of the matter is there's a higher degree of risk when you're trading futures, okay? Positives, the spin on this. If you go down the CFRN path, okay, you are going to have a trading plan, correct? We're going to go over that trading plan in just a second, okay? Again, a few minutes ago, I put up our trading plan, okay? So you're going to have a trading plan. So that checks that box, right? As outlined here, every trade has an 8-tick stop attached to it, okay? So that checks that box. All right. We're going to be trading on a 4-tick range chart, okay? Get this in front of you here. In fact, let me get this one in front of you. You're going to be trading on a 4-tick range chart, okay? So you have to be in front of the screens and you have to be engaged in the market, okay? So that checks that box, right? One of the big items with CFRN is they don't trade around news items, okay? They're unpredictable. Markets move crazy. There's a lot of times, you have some uncertainty leading up to it and certainly afterwards. So the idea is not to trade around news items, okay? So you'll be in tune with that. So that will check that box, all right? And once the trade setup applies, okay, so when the rules are in play here, okay, and we're gonna go over the rules here in a minute. We're gonna go inside this tower. We call this the depth of market. This is where we do our buying, and this is where we do our selling. Okay. So you have to be engaged in your trading account. You have to be engaged and know what you're doing on the platform. All right. So it checks that box. All right. So the point is up front, I kind of scared you with the disclaimer. Okay. That you can lose everything in your trading account if you're not using those simple things, not using a stop, not having a trading plan, not engaged in your trading account, not in tune with the market news. Again, when you go down the CFRN path, you're going to check a lot of those boxes off. Okay. Does that eliminate the risk altogether? Absolutely not. Okay. We could get a tweet. We can get some news event where you're doing all the right things. You can be in the market. You can have a stop in. You can be in front of the screens. You can be engaged, and something silly comes out, and the market could just hop right over your stop. That is a possibility. The good thing is that you will be in front of the screens, and if that does happen, okay, you can hit this exit at market and cancel hotkey and get you out of the trade altogether. Okay, and then once you get out, then you can call Bert and say what the heck just happened, and cool yourself off a little bit. Okay, so again, not a great way to start the webinar, but this is an eyes wide open approach. It's what I'm advertising, and so it starts with the disclaimers and the risk that are associated with trading. Normally, my experience, because I've been around since day one, a lot of the guys that knock on the CFRN door, okay, they've been to this guy and this guru and this room, and they've learned this method, so they're pretty numb to this thing. Okay, they've been beat up, they've lost money, Okay, they're kind of worn out by this. Okay, this disclaimer really is for the guys that are brand spanking new learning what the business of the futures market is. Okay. In addition to that, past performance is not necessarily indicative of future results. All right. Well, what the heck does that mean? Well, it means that whatever you're learning today may not work in the future. Right. That's what that means in a nutshell. Well, the good thing is, yeah, your phone's cut out. Yeah, I got it. I'm showing you this. This is the trade setup that's been around since, well, this is a screenshot that Michael took back in 2012. All right. This setup has been around since day one. So has it changed? Has it been form-fitted, or has it been tweaked? No, it hasn't. Okay. The same setup's been around from day one. That's why I'm going over this one. It's the traditional slingshot setup that you see in the room every single day. Okay. Now, along the way, the 137, the 164, and some other things have been created. Okay. But this guy has been around since day one. Okay. So again, going back to our disclosure document here, right? Past performance is not necessarily indicative of future results. Yeah, it's true. Okay. But again, you know, we're still learning the same things from day one. So, and in addition to that, and this is a good point, the funds that you put in the trading account should be risk capital. It should be money that you can afford to lose. I know nobody likes to lose. I don't either. I don't like to lose on a trade. I don't like getting stopped out and then the market going in my direction. I've been through all that. Okay, and I have seen that. But in the event that something crazy does happen, it should change your lifestyle. You should be able to pay your bills, stuff like that if you lose money. Okay. You know, if it gets to a point where you're like, look, I can't lose anymore, then it's time to, you know, call timeout, maybe call me, talk about it. What are we doing? You know, have that conversation. All right. So again, that's the first slide. That for the most part that covers that. Okay. Again, not a great way to start the webinar. I could have just shoved this thing up here and said, hey, take a look at it and then move on. But I've just been around too long, so I like to go over it. All right. The next slide really covers my relationship with CFRN because, you know, I'm there every day. So, you know, people want to know, you know, who are the cast of characters? Where does everyone fit? Stuff like that, right? So my name's Bert. I'm with Daniels Trading. Okay, that's who I am. No, I don't work for CFRN. Okay, CFRN does not work for Daniels Trading. There is a line between us. It's a brick wall. It has to be for compliance purposes. Okay. Basically, the relationship works like this. Okay. I'm Daniels Trading. I support the trading platform. The trading platform that you see here is DTPro. Okay. It's property of Gain Capital. We are the futures division of Gain Capital. Okay. So I support the platform. So if in the event you go down the CFRN path, you're going to take the trial and you want to download the indicators, we're going to give you the platform for free. Okay, you can take a demo. You can download the indicators. If you have problems downloading the indicators or the platform or what have you, you're going to call me, Bert. Okay. The beauty of that is you can call somebody and talk to a live body. Okay, that's comforting if you're learning something new. Okay. The additional thing is too is I know the setup. I teach the setup, and we're going over it today. So if you have questions about, hey, what is Michael saying about this or that, or I'm confused about that or this, just ask. You just have to raise your hand. Okay. So I support the platform. Michael is in the training room every morning. That's his spot, 8:30 to 10:30 for 2 hours. He's in the room. I'm in the background, just letting him do his thing. On occasion, if he steps away, if there's a point I want to make, I'll probably step in and say, hey, let's talk about this because I've seen this happen over and over again. Okay, Dwayne, he's mostly in the radio program in the afternoon. Okay, he's doing the radio, but he's also doing the Logic 247. Okay, the concierge trade alerts. Like I said, let me get this in front of you. Logic 247. That's his kind of deal. Okay, that's what he's working on. Okay, so everyone has a little role. Okay, and I forget. Valerie's in the background, and she handles support, and she was I think a big addition to the team because she's able to answer phones and emails and stuff like that, especially if Mike's running around or Dwayne's in the radio program. She's there to kind of help you out. Okay, so when Mike's not around in the morning, it's not uncommon for her to step in and take over the charts. That's kind of a cool support person to have. So that's her role. So basically, that's the cast of characters, and that's how we all kind of fit together. In the end, if you decide to go down the CFRN path and you decide to use the DTPro platform, I handle the execution and the brokerage part of it. Okay, so you would open up the account through me. I would help you with that process, getting the account set up, all that other stuff. I handle it. It's the brokerage side of it. Does everyone do business with Bert? No. Okay, but it's available, and like I said, the pluses are I'm a phone call away, and if you need something, it's not uncommon for me to jump on your computer and show you how to do it. Okay, and if we have to take a time out to go over some setups and stuff like that, it's also fair game too. So a lot of times you don't get that support when you go down. You go to some of these training rooms and educators. Okay, so in the end, CFRN is a third-party educator. It's their tools, it's their indicators. Okay, they're built inside DTPro, and with a few right clicks, you're going to have them up and running. Okay, it's that simple. All right. A lot of questions get asked. Well, does CFRN get a cut of the commissions and what have you? Nope, can't. They never asked. That's a big compliance no-no. The good thing is they didn't even ask. So you should feel comfortable with that. Okay. So that's our relationship, and that's kind of how we all fit in. Okay. So I do the CFRN Thursday bit because there was enough hand raises in the room that said, look, slow down, slow down, slow down. I need some help. And so I decided, you know what, I'm going to do it. And I'm in the room, and I know the setup. I know the platform. So it's comforting to know that, you can rely on me or someone on the other end of the phone to walk you through something. Okay. All right. A few things, advance notices. Okay. This is live. So if my phone rings, I'm going to have to put you on hold and hit the mute button. Okay. So I just wanted to give you the heads up there. I'm not ignoring you. Okay. All right. Let's move on. Let's talk about the trade setup. Okay. So if you're brand new, this is your syllabus. This is your cheat sheet. This is what's going on in the room every single day. Okay. It's just a snapshot with me going over it and going over some of the buzzwords and stuff. Okay. So the first order of business is the time frame. We are on a 4-tick range chart. 4-tick range chart. So if you have DTPro, in fact, let me organize my desk a little bit. Stand by. Let me shut down live. Stay in demo mode so I don't goof anything up. Let's stay with this guy here. Let me get the question box out so I can see it. So I don't ignore anybody. All right, I think I'm all set. So as I said earlier, the first order of business is the time frame. We're on a 4-tick range chart. Okay. So if you have DTPro, how are you going to get there? Well, chances are most people are on a time-based chart. on a daily, hourly, 30-minute. If you're following logic or logic 247, you're going to be on a 30-minute chart or you're going to be on a 5-minute chart, right? Because that's what Dwayne is preaching and teaching, right? You need to get on a 4-tick range chart. So see the little drop down button next to your time base? Left click on it and go down to custom and select range bar. Make that one look like a 4. Okay, then hit OK. Okay, you're staring at the S&P mini in a 4-tick range chart. Okay, now why that time frame? Well, a few things here. Number one, the height of each candle is 4 ticks in height. Okay, sometimes they look smaller, bigger. They're all 4 ticks in height. Okay, why is that important? But here's one thing you're going to hear inside the training room. Okay, at some point when all the rules apply, okay, we're going to go over 4 basic rules. Okay, but when they're all in play, okay, at some point you're going to hear Michael call out the highs and the lows of then the current bar that's printing. Okay, if you're staring at this DOM, okay, that's where the current market price is. Okay, what he's doing is he's preparing to place an order in advance. What? He's getting ready to place an order. Okay, so if he has something that's saying, hey, I need to get long, then what he's doing, he's being a little bit proactive and he's placing a buy stop above the current market price. Okay, a buy stop. All right. If it's a selling opportunity, okay, he's looking for the market to go down, then he's placing a sell stop below the current market price. We do that by right clicking. Okay. Okay, we do that by right clicking. Notice how it says buy stop when I right click in the green, and you notice it says sell stop when I right click in the red. Okay. What that means is, okay, if the current market price is here and he has an order here and an order below, if the market takes off, okay, he's in the trade. He's taking advantage of it. Okay. If it's a selling opportunity and the market's breaking down and then the market drops, he's going to be in the market, taking advantage of it. Okay. There's some pluses and minus advantages of doing that. Obviously, the one is if it takes off and he's on the run with it, hey, he's gonna take advantage of it, right? The flip side of that is you're buying and selling things on a stop and your prices aren't guaranteed. We call that slippage in the business. Okay, so there's ways you can combat that, but the bottom line is, you can expect some slippage in some of the markets. But the bottom line is, we're on a 4-tick range because one, it makes the chart real smooth, and two, Michael and yourself can be proactive in placing orders. If that happens in a few minutes from now, I'll show you exactly how to do it. Okay, I'll tell you and I'll show you. I'll go inside the DOM and do it right away. Okay, so you'll see that in action. All right. So I just wanted you to know. So when you start hearing him talk about highs and lows, he's getting ready to place an order. Okay. And the other thing too is, there's going to be a point where he might catch a runner, and you're going to, well, timeout. How did you get into that thing? That was moving too fast. No, he sold it on a stop. That's why. So that's why I bring it to your attention, because you're going to see it, and you're going to hear it. So we're on a 4-tick range chart. Okay. The first trap that people fall into, very common mistake. They come down to custom, but they go to tick bar. They make that 2 look like a 4. It's the same chart here, but that's what it looks like. If you're staring at something like this, it's wrong. Okay. It's not smooth. So that should raise a red flag. 4-tick range, big difference in the chart. Okay. This is your little tip here. Parentheses R. Okay. It's right there. All right. That's the long-winded explanation of the time frame. We're on a 4-tick range. Okay. Yes. you can trade this on larger time frames. Logic is trading on a 30-minute and 5-minute. You can also trade these on a daily. Okay, so the same setup, same set of indicators, or you can apply them to larger time frames. So don't discount that. And I'll show you an example, a cool example of that. Okay. All right, let's get back to the rules. Give me about another 5 minutes and then we'll jump into the market. All right, we're going to work on the top portion of the chart. All right, so here we go. The red and blue line is the MA1. Okay. The green line is referred to as the BBC. That is short for the bullish bearish cross. Okay. So together, that leads us into step number 1, which is this. When the MA1 is red and crossing the BBC, it's a bearish cross. If the MA1 is blue and crossing the BBC, that's a bullish cross. So the one that's highlighted here is a bearish cross because the MA1 is red, right? Not a big deal, okay? So red means sell, buy means blue, okay? Or either way, okay? So that's what you're thinking about. All right, so the one that's highlighted is a bearish cross because the MA1 is red, all right? Now, I want you to take note of this. I didn't say get short. I didn't say get long. I didn't say get short, okay? I said at that point, we're looking for bullish and bearish opportunities because here is the normal thing that happens after the cross. And this is going to lead us into step number 2, okay? The normal thing for the market to do after the cross is to gravitate toward the BBC or that green line, okay? That's the normal thing we're looking for the market to do. So not only are we looking for the market to challenge the green line, but we're also looking for the market to close in the direction of the trend, okay? If we have a red MA1, we better be looking for a red candle, okay? You're going to find out in the end, when everything is the same color, that stacks all the probabilities in our corner. That is the easy and obvious trade that I talk about in the afternoons. Michael referred to that in the training room this morning, okay? They don't come around that often, but when they do, there's no more guesswork, okay? It's just a reaction into the DOM, okay? As soon as you see it, you go inside the DOM and push a button, okay? And then manage the trade from that point on. Is that it? That's the easy and obvious, okay? So after the cross, we're looking for the market to gravitate toward the BBC and then close in the direction of the trend. That is step number 2, okay? Big question I always get. Why don't you just place an order right there to go short? Look at all that movement. You would have caught that move. I get it, but this is after the fact, okay? Sometimes the market just does this, okay? If you just placed an order there, okay, and you didn't wait for the close, so you're sacrificing price for action, okay, you're stopped out, all right? So we're looking for that down close, that extra little variable that says, you know, maybe this is right, maybe this is going to head down, okay? We're sacrificing price for action, all right? So that's why we don't place an order there, all right? All right. Step number 1 is in play. We're thinking get short somewhere. Step 2, we know the market needs to gravitate toward the BBC and we're looking for the down close. Well, we get step 2. So now our eyes gravitate toward the slingshot or the oscillator portion of the chart, okay? Basically, the trade setup exists down in the slingshot, okay? And I'm going to show you why. I'm going to break down some of the components of it, but in the end, it all happens down below, okay? So you need to know some of the components. The red and blue line is referred to as the cycle. And the green line, well, there's nothing special about it. It's just the cycle. Okay. But here's why it's important. The cycle is saying, look, the cycle is red. Okay. Red MA1, a red candle in the direction of a trend. I guess we would be looking for a red cycle. Okay. All the colors are all the colors are stacked up in the same direction, right? This is saying, look, the momentum is bearish. It's red. Not only that, look at the slope on it. It's down at a 45-degree angle. It's good for the home team if you're looking to get short. Okay, so it's telling you, look, the NASDAQ on a 4-tick range is bearish. Okay, the momentum is bearish. Okay, so stop right there. All right, green line pulling away from the cycle. Together with this price action here, which is the normal thing, okay, this is saying, look, this is just a pop-up in this ongoing downtrend. That's what this is suggesting. Okay, the separation, okay, the little yellow arrow is highlighted here. Separation between the green line and the cycle, that is the divergence or the separation that Michael is talking about in the training room. Okay, and here's why the trade exists down here below. Okay, because when step 1's in play, step 2's in play, and step 3, which is a separation. By the way, that green line, notice how it's being pulled away from the cycle like a slingshot. Okay, when this is being pulled away, there's nothing left to do but go inside the DOM and get short. Okay, that's it. So what happens from that point on? What we expect to happen in the end is the green line will ultimately come down and close the gap and touch the cycle. That's what we're looking for. And at the same time, price is going to follow along and make a new pivot low. All right. And at that point, because I'll get this question later, when do I take profit? It's right here. Okay. When that green line pulls away and then gets into the cycle. Why does the trade exist down in the slingshot? Because the next thing that's supposed to happen is the green line will pull away, get into the cycle, pull away, get into the cycle until, guess what? The momentum has changed. It's blue. Expect prices to go up, right? And then our green line is then creating bullish divergence, getting into the cycle, pulling away, getting into the cycle. So in the end, what you end up doing, selling this top, buying this dip, buying this dip. And along the way, you're taking profit here as the green line gets into the cycle. That's it. That's why it's down there. Okay, so that's why the trade is down here below in the slingshot. Okay, so the question I always get, and I saw the same question in the room this morning, when is the time to take profit? When that green line gets into the cycle. So right here, okay? And along the way, when you enter the trade, you're going to trail the stop, trail the stop, trail the stop until that cycle gets closer and closer and closer until you just hit the market button, get out. Okay, that's it. That's all you have to do. All right. That's the first phone call. All right, so stand by. Don't go anywhere. Let me figure out how the heck to hit the mute button here. All right, sorry about that. That was Brett Chamberlain. He was calling. It's like, hey, when does your webinar start? I said, well, we're right in the middle of it. So, anyways, a little bit of comedy there. But so the idea, like I said, we expect the green line to pull away and then ultimately get into the cycle. And that's at that point is when we close out the trade. Okay. Remember, every trade has an 8-tick stop attached to it. It doesn't matter what markets you're trading. That's a hard stop. Okay. If you're brand new, what does that mean to you? If you're trading crude or the gold, that's 80 bucks a if you're dead wrong, it's 80 bucks a contract. Okay. If you're trading the ES or maybe even the soybeans, that's closer to $100. If it's the YM and the euro, you're looking at half of that, or about 40 bucks. Okay. So that's what you're getting into if you're dead wrong. But every trade has an 8-tick stop attached to it. I see a question in the box. When do I move the stop down? What are the rules of engagement there? It's real simple. If the market goes 4 ticks in your favor or 1 candle length, you move the stop to break even or your entry. I will show you how to do that. Okay. We'll get into a live market in about 2 minutes. Okay. But I wanted to summarize. I'm going to take 1 minute to say this. If this is day 1, okay, I agree. Get rid of all this. Here we go. This is day 1. Here's what you're learning to do. You're not learning to pick the top, and you're not learning to pick the bottom. And you're not going to learn to trade from point A to point Z. You're going to learn to take a piece out of the middle. Okay? You're going to be scalping. You're going to be day trading. Okay? You're going to be using aggressive risk management. So that means potentially a lot of trades. Okay? You're going to be in front of the screens. This is not something you can just set it and forget it. You have to be engaged in the marketplace. You have to be engaged with the news items. You have to be engaged in the trading platform, right? And you're going to use some aggressive risk management. So you might have a lot of break evens. You might pluses, minuses. The bottom line is you're learning to scalp. Okay, you're not going to hold out anything overnight. Okay, you get special day trade margins if that's the case, but that's what you're signing up for. Okay, so at the end of the day, you just got to ask yourself, hey, is this something that I want to do and something I can do and stuff like that. Okay, so that's the deal. And as I said, as an aside, yeah, you can use this stuff on larger time frames because I do it. Okay, so some of the trade suggestions that I make are based on the CFRN indicators. Okay, so here we go. Let me get rid of that. All right, so let's go over here. Now I'm on a single thread. What does that mean to you? Well, when you're looking at Michael's charts, he's got 4 charts side by side by side by side. Okay, for me, I think it's easier to have one single thread and everything linked to it. For example, I'm staring at the ES, I just click it. I'm staring at the crude, okay, click on the crude, both the chart and the DOM changes. Okay, that's all I have to look at. All right, so we're looking at one chart, one DOM, so there's no confusion. All right, everything's out in front. Okay, all right, so here we go. The number one thing that we look for before you push any buttons, and if you are a CFRN member, you already know this because I pound on this every Thursday, is the market trending? Okay. It's easy to say, it's easy to talk about, okay, but in reality, it's hard. This is the number one trap that people fall into. They don't realize they got caught in the sideways market. All right. So what's the solution? See this zoom out button, this red magnifying glass? This should be your best friend. Okay. So as you go looking at the different markets, okay, you should get in the habit of hitting this zoom out button. Okay. So the question is crude oil trending right now? Zoom out, zoom out, zoom out. Okay. I look at this and I say we're sideways. Okay. Now I know we have a bullish cross here. Why is it a bullish cross? Because the MA1 is blue and it crossed the BBC. What's the normal thing for the market to do after the cross? Everyone gravitate toward the BBC. Okay. It finally does it here. Are we looking for an up close or a green candle? Yeah, we get that. All right. Do we have a blue cycle? Yep, that's good for the home team. Do we have separation? Is that green line underneath it? Yes, but not a lot of space. The problem is dynamic resistance is printing overhead. And as I zoom out, okay, look at the resistance we can see over here and some above us. Okay, so right now we're caught in a sideways channel. So I wouldn't touch it. Now you're going to say, hey, you know, it moved up. Yeah, it did. Okay, you're going to run into that. Okay, and you're going to blame me if it doesn't, if you don't take a trade and it blasts off. Okay, I have been there, done that. I get it. Okay, the zoom out button here is going to be your best friend. Okay, I'm not asking you to go to a 15-minute chart, 30-minute chart, hourly chart. Just hit the zoom out button. If you're on a 4-tick range, you should be looking at the 4-tick range chart to see if we're trending. Okay, your stops are based on a 4-tick range. So zoom out, zoom out, zoom out. Notice we're congesting here. We have a double bottom and we have a double top. Okay, so you're asking for trouble. Let's move on to another market. I'll make some comments here, so don't. Okay, let me get to the right count. You should be on the April. All right. So are we trending? This is the gold market. I zoom out. Let's make some comments here. Notice the difference between what I see here and that crude oil chart we just looked at a few minutes ago. When I zoomed out, there was a bunch of congestion over here, right? See the air pocket? Okay. We are trending. We were congesting here. We finally broke out and started trending again. Same congestion here. Okay. And then we broke out. So we actually are trending. All right. So since we've established that, let's go through the rules. Okay. Bullish cross. Okay. Our mindset is we're looking to buy pullbacks. What's the next thing that we expect the market to do? Pull back to the BBC. Okay. Stop right there. All right. Why? Because as soon as you get the cross, a good habit to get into is to activate this trend line right here. Why do we activate the trend line? Because we never know if it'll get down to the BBC. BBC, remember, is the green line. Okay? So what you have to do is you have to get in the habit of drawing a trend line. Okay? Because you never know if it's going to get down there. It may have so much bullish or bearish momentum, it doesn't quite get there. And if it does, and some of the other rules apply, it's time to hop into the dome, okay, and take action. But you got to get in the habit of drawing a trend line. And what you do, as soon as you get the cross, activate the trend line and start drawing, okay? Your chart should be filled with trend lines, okay? Cross over and over and over, okay? By the way, a quick way to get rid of all the trend lines, select all, hit the black X, all right? So we've established step one's in play, right? Activate the trend line because that's what Bert said to do and that's what we were trained to do. And we draw the trend line. Here's the pullback to the BB and the first up close is there. Okay, step two is in play, right? Pull back to the BBC and the up close. Our eyes gravitate toward the slingshot and we got a problem right off the bat. Okay, number one, it's not blue. So what does that do? That should register. That's basically telling you, look, Number one, if it's not the same color, that waters down the probability. Okay. Ideally, we want that to be blue if we're looking for a buying opportunity. It's red. All right. So now you're asking for a little bit of trouble. Secondly, if it is red, this trend line is required. Okay. So that's the other reason why we draw this. So number one, we don't know if it'll get down to the BBC. But two, if the cycle turns color on us after touching the BBC with the up close, this trend line is required, and a close above the trend line is required before we can take action. Okay, so here it is. There is the up close and a close above the trend line, defined by this. Is there separation? Is the green line pulling away? It is. Okay, that's a valid trade setup. Okay, the curveball. Okay, I hate to throw this. This is a bad example to go to, but it's live. Okay, one of the disqualifiers is this. Here's one. If it's a different color, we know it waters down the probability. That's not good for the home team. If this is flat and in the middle like it is, don't push any buttons. Okay, that's a disqualifier. All right. The other disqualifier, see if I can't show you right here. See, as the market is pulling back to the BBC, and you notice here we get the first up close. You're like, okay, cool. I can finally get long the gold because I think it's going to go up. And then your eyes gravitate toward the slingshot, and you're like, shoot, it's red. Not only that, look at the slope of it. It's at a 45-degree angle against you. Remember, we said we want it to be blue, right? It's against you, so you're swimming against the tide here. All right? No trade. Okay? If it's a different color and tilting against you, or it's flat, don't touch it. Okay? What it usually suggests in the end is sideways and possibly a trend change. Okay? That's what it means. And as you can see, after the fact, well, it actually consolidated and ultimately it did go up. Okay? Most of the time, it does this and goes down. Okay? In the end, what you end up doing is stopping out at break even because it's sideways, getting stopped out, or just flat out get lucky and it goes up. Unfortunately, if you get one of those lucky moments, it kind of invites you to come back to the game and do it again, and that's the one that stops you out, right? And then you're like, oh, like Bert said that was going to happen, and yeah, I should just listen to him. But the fact of the matter is, a lot of times those don't work out, so stay away from it. Remember, easy and obvious. That I would take that. That's a good takeaway. All right. Doesn't mean all the trades work out. It means all the rules are there. Okay. Blue cycle, blue MA1, right? Everything's the same color. Market's trending. There's no other filtering. All right, let me be quiet, move on. Let's go to the S&P. Zoom out, zoom out, zoom out. I'm hitting the red button, okay? Are we trending? No, okay, we're sideways. If you're unsure, number one, don't push any buttons if you're unsure. But number two, look at dynamic support and resistance. You notice how they're side by side? That's a clue that we're not trading, we're trending. We're not trending at all, we're sideways, okay? So what that means to you is we either need to break out or break down before we take any action, all right? Stay out of here, okay? Stay out of it. Here's what happens, and this is why you have to get in this habit of hitting the zoom out button. In the mornings, you get hypnotized by the charts. They're side by side and they're blown up pretty good, right? Okay. What might look like it's trending, we're making some higher highs. blowing up. If you zoom out, you might just find out that now the sideways channel is just expanded. All right. So you end up being in a bigger chop fest and you just don't realize it. Okay. Because you're looking at it under a microscope. It's not your fault. You're just learning. And unfortunately, you have to lose a little bit of dough to realize that. But honestly, when you get the chart blowing up like that, and this is not beating up on Mike, the idea is I'm just making you aware. You get that pullback, you get a nice close, everything might be looking good, right? This chart, hey, I need to get long. Zoom out, zoom out, zoom out. It doesn't surprise me that the market is giving you grief because we're sideways. Okay, I'm pounding on this point because this is where people struggle. Hit the darn zoom out button. Okay, that's all you have to do. And if you're unsure, don't do anything, right? All right, enough of that. Let's go back to crude. All right, so notice big air pocket here, right? We broke dynamic resistance. That's a good sign that we broke this top, right? That's also a good sign. So let me blow this up. Okay, so I'm going to do a few quick things real quick. All right, what just happened? All right, so let me break this down. Number one, we identified that the market was trending. We're looking at the crude oil. Okay, the reason why we draw trend lines is because we never know if it'll get back to the BBC, right? All right. We've established 2 candles, so we can draw a line. Is that enough close? Is that above the trend line? Absolutely. So that qualifies. Do we have a blue cycle? Yes, we do. Is the green line pulling away? Yes. So do we have separation or divergence? Yes, we do. This is a valid long setup. This is a trade Michael would take in the training room. Okay. So that's why I went inside the DOM and left click. No matter what happens, win, lose, or draw, that's valid. Okay. Now, notice the DOM. When I push this button up here, this is a bracket order. Okay. When I push it, notice how the bottom of the DOM opens up. If you check buy stop and sell stop, but more importantly, when you right click over it and go factor in ticks, right click over it, hit factor in ticks. If you make that an 8, that automatically puts a stop loss 8 ticks behind the entry. Okay, why 8 ticks? Well, every trade has an 8 tick stop attached to it, right? No matter what market we're trading. Okay, so we are long here. It shows you on the chart. That's pretty obvious. It shows you up here on top of the DOM. And if I had a P&L up here, that would be moving. But there's about 4 places that says, hey, you know what, dude, you're long. Okay. Now, we just talked about a bracket option, right? Here it is. It's down here. That's our stop loss in play. Okay. Now, the rules of engagement is if the market moves plus 4 ticks in our favor, the market would have to go here. We move the stop to break even or our entry. Okay. How do you do that? All you do is you put your mouse over the number 1 here. You left click, hold it down, and release it. Hold it down, release it. That's all you have to do. Okay. In addition to that, if I take it a step further and hit position and order management and pull up this working orders box, which by the way, everyone should have open. Okay. Notice when I move this guy, so does the price inside the box. Okay. The reason why it's important to have this box somewhere floating, because in the end, if you decide to get out of the trade, okay, this should be blank. all right? If you have any loose ends somewhere over here, it's going to show up in this box, all right? That means you have an outstanding order working, okay? So it's key somewhere on your dashboard or on your desktop, you should have this in the background. Let me tell Clark, I'll call him back. Hey, Clark, let me call you back. All right, so we're just waiting for the crude. All right, do we understand why we got long there? Okay, so again, just going through the rule set. I zoomed out. Are we trending? Yep, we have higher highs. Okay, so I can't rule that out. The market started pulling back, right? Because we had the bullish cross back here. It started pulling back, so we were able to draw a trend line. The reason why we draw a trend line, because we don't know if it'll get back to the BBC, right? Did we have a close above the trend line? Yes, we did. Our eyes gravitated toward the slingshot, and we had the divergence or the separation that Mike's looking for, okay? Everything was in play. So all I did was go in here and left click. That's all I did. There's our entry. There's our stop, 8 ticks away, okay? So that's it. The bracket option is in. We're just waiting for the market to go up. So 4 ticks in our favor. So I highlighted, and what I'll do is I'll put an alarm here, okay? 5110, or a close on the other side of the MA1. Remember that buzzword? This blue line is the MA1. So if it closes over 5108, okay, then we move the stop to our entry. Okay, so we'll move this thing all the way up to where we got long from. Okay, that's what we're looking for. Give it a few minutes. If it doesn't, I'm going to move on to another chart so we can look at some more examples. So that's it. You might say now, is this good? No, it's not. Okay, remember, it's turned on us, but it is what it is. Okay, so we're just waiting for the market to go up. Okay, so in the end, the green line pulls away, and then ultimately should come back up and touch the cycle. And it's at that point, the market should be making a new pivot high, and this is where we close out the trade. That's the game plan. Okay, so let's see what happens. Give it one more minute. Are there any questions about that? See, air pocket. Okay, it's trending, so I couldn't rule it out, no matter what. Now it's like watching paint dry. Now you guys understand why I can do this in slow motion between 1 and 2 o'clock. Okay, sometimes it's watching paint dry. All right, so here, doesn't do us any good to stare at the crude oil for 5 more minutes. Let's go down the currency. Okay, so here we go. I'm going to just go from top to bottom. I put an alarm in that crude, so if it goes up, great. Okay, then I can move the stop up. And if we get stopped out, it'll pop up. But it is what it is. Here's the euro. Notice the first thing I do, zoom out, zoom out, zoom out. Are we trending? I look at this and I say, no, we're not trending. We need to be making higher highs or lower lows. We're sideways at best here. The British pound. Are we trending? No. We have support here. Okay. Notice the dynamic resistance side by side. If the pound ends up trading below this double bottom here, then we can get excited about getting short. Why? Well, I look at the cycle here. It's turning red and starting to curl down. That would give me some excitement that, hey, you know what? If this thing starts making lower lows, we could sell the pound. Okay. But for the moment, it has to spend some time underneath the slow, or we don't touch it. Okay, let's move on. Swiss franc, again, caught up sideways. So nothing going on there. Australian dollar. Okay. If we get under dynamic support, okay, the green dots are dynamic support, the red dots are dynamic resistance. If we start closing underneath dynamic support, then we start looking to get short. Okay. Canadian. We have the bullish cross here. Okay. Open table, get out of my way. Zoom out, zoom out. A lot of congestion over here. Okay. Nope, I wouldn't get excited about the long side just yet. Okay. I think there's better opportunities out there. Okay, let's look at, here's another example of, let me point this out. Okay, we have the bearish cross back there. There's a trend line. Okay, that's the uptrend, that's the down close, right? Like I said, we don't know if it gets here. It ultimately does, but that turns a shade of blue. Okay, we know, waters down the probability, but now it's curling up. So now we're swimming against the tide a little bit. Doesn't have that 45-degree angle like it does now, but it's curled up a little bit, okay? Just so you know, if it's a different color and flat, okay, that's fair game. You're gonna see Michael take trades all day based on that. If it's curled up a little bit, okay, my opinion is it's not easy and obvious. You're asking for trouble, just stay away, okay? Ideally, what you want is in a shorting opportunity. You want a cycle that's red but has a good slope to it, okay? You want the wind to your back, right? When it's blue, you're kind of swimming against the tide, right? So don't. Wait until it's the same color, okay? There'll be less trades, okay? But at least in the back of your mind when you're pushing the button, you should have confidence that all the rules are in play, all right? And if it doesn't work out then, it doesn't, okay? All right, so I wanted to point that out because that's, you know, that might be, here's the thing. The questions I always get is like, well, that's not 45-degree angle. That's like 20% or 30% or whatever. It's not 45-degree angle. Look, if you have to ask yourself if it's 20 or 25, it doesn't look like it's 45. If you're going down that path, just don't even do it. All right? Just it's not easy and obvious, right? Should just be a reaction. All right, let's go to Mexican peso. All right, that was the peso. All right. So again, there might be a better example of it. Here's the trend line, pull back, and notice the slope. Okay, it's red. Okay, it doesn't have a lot of separation, but my point is this cycle portion of it. Okay, it's red and it's got a nice slope to it. That means it's the wind's at your back, so that should give you some confidence. All right. So the bottom line is the yen doesn't have it set up right now, but if we make a lower low, maybe we can get excited about it. Okay. The crude is laboring. Okay. Here's our stop. We are still long. This was a valid setup, win, lose, or draw. If it goes 4 ticks in our favor or closes on the other side of this MA1, we will move the stop. I'm hoping to move it up so I can show you how to do it. All right. So again, that's why we don't stare at it. Let's move to the S&P. Okay. Sideways, right? All agree. This reminds me. Can you do these on a larger time frame, right? Can you use the indicators? I'm glad I ran into this. All right, check this out. This is a daily. Okay. Do we have CFRN members in here? Thomas might know. Thomas, you might know this, okay? So I might lean on you. By the way, thanks for the black water. Check this out. Remember I said we just went over the traditional slingshot setup? This is also a setup. When the brown and green line are together and pierce the cycle, okay? This applies on a 4-tick range, but this is applying on a daily, okay? When the green line are together, okay, and piercing that red or blue line or the cycle, and you get a close on the other side of the step line, okay, it's telling you this has got some momentum. It just happened here, okay? And look at the reaction we've gotten so far. So if you're wondering, can you use some of the trading tools on larger time frames? Heck yeah, all right? This was a big signal to say, look, you better not be short, okay? And for obvious reasons too, okay? Aside from, you know, we were breaking some trend lines and stuff like that, right? This was a simple trend line we broke. But the fact of the matter is, that was telling you, look out. Actually, you could have just bought just based on that. So, yes, it could be done on larger time frames. Okay. All right. So again, this is the S&P. See, like right here, guys, 4-tick range. See how the green and brown line pierce the cycle? And you notice right here, we've got that close below the black step line. Okay. And then you get a reaction. All right. It doesn't happen often. All right. But that one, you know, with some of the other trade setups, that one I kind of like because, you know, it seems on larger time frames, it seems to work. All right. So keep that in mind. That's called the 164. All right. All right. Crude, still laboring, still have the stop in, probably going to get stopped out. Who knows? So let's go to natural gas. GNG, March. I'm going here because we had an AGA report. That's the natural gas supply number. And I know that kicks the market around. So we had the bearish cross here. Okay. So we're looking for pullbacks in the market. Okay. We get two green candles here. Finally, we get a down close here. Separation with a red cycle. So that was good. You'll say, hey, what about dynamic support? You're absolutely right. If I got hit in the face with this, I probably wouldn't have taken it either. But it demonstrates a lot of the steps there. Okay, so I wouldn't take credit for that at all. Hey, Levon, can I call you back? I'm in the middle of a webinar. Give me like 5 minutes. Okay, cool. All right, see ya. All right, that's Levon, just so you guys know. All right, let me show you something else. Let's look at gold. Let's eliminate some of the ones that we trade. Sideways here. Okay, so I wish there was something we could trade there. What I do like is when I look left, okay, we have an air pocket. I'm not looking at a bunch of congestion, okay? There's a blank palette here, so, you know, that tells me we could be going higher. But for the moment, we're stuck in a range, okay? All right. Those guys that really like to trade the NASDAQ, the YM, the mini Russell, look, that thing is moving, okay? With this volatility we're getting, it's really hard to trade this on a 4-tick range chart, okay? So here's a solution for you guys, okay? Because there are guys that, hey, I'm a NASDAQ dude, or I'm a mini Dow guy, and that's what I trade. And I get it. I like that. That means that market fits your personality. That's a big question I always get. How many markets should I trade? What market should I trade? Look, in the beginning, look at 3, 4, 5, 6 different markets. It's fine. Okay, you're trying to see examples, examples, examples. You're trying to absorb what's going on. In the end, what you're going to end up doing is gravitating toward those markets that fit your personality. That's what ends up happening. It's funny because in the beginning, Michael was trading the mini Russell, okay? And, you know, I've been doing this for a long time, all right? I'm like, man, if he can do it, I can do this, all right? Nope. Get on the mouse, the thing's jumping around, hopping. I'm like, get me out. You know, move the stop, get me out. Just couldn't do it. It's because I didn't know the person out of that market, all right? The point is you'll gravitate toward those markets that you kind of are in tune with or just know the personality, okay? My point was, if you are a NASDAQ junkie or a mini Russell junkie, slow it down, okay? And we just got stopped out of the crude, all right? Go to an 8-tick range chart and slow it down. The rules apply, the same rules. The only things that change are the stop losses, okay? If you're on an 8-tick stop, 8-tick, okay, 8-tick range chart, then your stop is 16 ticks, okay? Nothing changes. The setup is the same, just the risk, right? Nothing changes. So again, I'm staring at the NASDAQ and ha ha ha, we're trading sideways. But, you know, again, bearish cross, pull back to the BBC. There's the down close. Is the trend line required? No. Why? Because when we look down below, the cycle is red. Okay, so the trend line is not required. And we have separation, right? And the cool thing is we have that bearish slant to it, right? It's down at a 45-degree angle, all right? So don't ignore it, okay? That means you can go for larger profits, right? Let's look at the mini Dow, okay? Notice, zoom out, zoom out, zoom out, and it's one big sideways channel, right? Blowing up like this, maybe not, okay? Maybe this is where you're getting chopped up. Maybe this is where you're getting chopped up. I don't know, okay? Go to the 8-tick range, okay? After the fact, right? This looks juicy. Red cycle, you have the separation, okay? All right, let's look around one more time. So, oh, you know what? Let me review that crude. That's not fair. So let me, so here was the setup right here. Okay, we said first, are we trending? I zoomed out, big air pocket, right? We're like, okay, let's draw a trend line because we're starting to pull back, and there was the up close. And at the time, we had a blue cycle and separation. Everything's there, okay? I have to go inside the DOM and get long. And that's what we did, okay? All right, just didn't work out. Bottom line, there's no explanation for it, just didn't work out. That's gonna happen. So you better be prepared for that, okay? You're not gonna find anything out there that's 100%, okay? But the bottom line is everything was there. Okay, this is where we got long. All right, and you notice as soon as this thing turned red, it was like, uh-oh, we're in trouble. And now look at it, it's starting to curl over. So that usually means we're gonna head down a little bit. Okay, so that's good. You guys should see. You know, when you're in the training room, you'll see Michael take winners and losers. Okay, that means he's human. It means it's not foolproof. It means that means that he's not trying to hide anything, because that is the truth. All right, so here's gold. Okay, so now we're making a higher high, right? You got to spend a little bit more time over this. Okay, then I would be looking at potential pullbacks to buy in the gold. All right, so that we have that going. Time is at 2 o'clock. Man, we didn't get. I thought for sure we'd get more examples than this. Let me just go down the currency path. Nothing here in the euro. Oh, thanks. Ooh, watch this, okay? Don't go anywhere. All right, be careful with this, especially if you are a CFRN member. Support, 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 okay? You're like, okay, I got this. Market's supporting. I'll wait till it breaks it, okay? And finally we get the close underneath it, all right? But then this candle here, okay? Be careful of that. This little trap, okay? I think poking its head underneath it for one candle is not good enough. I think you'd want to have it spend a little bit more time underneath support before you get excited about jumping in on the short side, okay? Because I view this, all right, as still holding support, okay? So you did the right thing. You exercised good patience by waiting. You had the down close. That's good, okay? But I'm concerned with that doji right there, okay? So that might be holding the market up. So if I were looking at the pound, I would let it break down a little bit further. And you're going to need it anyways, because the cycle is red, okay? And the green line will pull away. In the end, it'll form itself where you'll have that bearish opportunity. But a lot of people will fall into this trap where it just makes a low, okay? And it pokes its head underneath it, and then it pops up, and they think, all right, we made a new pivot low. Well, not really. We didn't really make a pivot low. Yeah, we made a low, but we didn't hang out down there, okay? So that popped up, so I wanted to make a point of that, especially if you're brand new, don't worry about that. If you are, there's a lot of CFRN guys in here. If you see that, be conscious of that, okay? Sometimes that could be a trap. Okay, let me go to the bonds. Zoom out. Again, a lot of good things happened here. We had the bullish cross. We did have a pullback to the BBC. We have separation versus the cycle, but again, not trending, so we're sideways. All right. So basically what we did is we ran into a lot of sideways market. I thought we'd see more action. Last Thursday it was crazy volatile. In fact, I didn't even do the webinar because the phones were ringing. All right. And I thought, hey, we had some action this morning. We might see some volatility. I was dead wrong. Okay. The takeaway. Okay. If you're brand new, lean on that syllabus that I pointed out earlier. Okay. This is it. And then, of course, the crude went up. Lean on this syllabus. Okay. That's the rules. Okay. That's the traditional slingshot setup. That's what's going on in the training room. Okay. Number two, trending is a big deal. Okay. Because you're not learning to pick the tops and bottoms here. You're learning to take a piece out of the middle, right? So I want you to get in the habit of hitting the zoom out button. Okay, I'm not asking you to change a time frame. Zoom out, zoom out, zoom out. Okay, that will see what's going on over to your left, right? That'll help you out. Number two, or number three, I don't know where I'm at, but as soon as you get the bullish or bearish cross, I want you to engage the trend line. Okay, you need two candles to connect the dots. All right, as soon as you get the candles, start drawing. Okay, but we do that because we don't know if it'll get to the BBC, and if the cycle turns color on us, that trend line is required. All right, and if you draw it in advance, all right, you're in a position to take action. Okay, you're not fumbling around trying to draw a trend line after the fact. No, it's just go inside and push a button. Right, so get in the habit of drawing the trend line as soon as you see the cross. All right. We want easy and obvious. That means everything to be the same color. Okay. You also would like to see slope. Okay, with you. Okay, not against you, with you. Okay, think of the wind behind you. All right. If it's a different color, that means, okay, I have to take a pause here, right? That's watering down the probability. And if it's against you at a 45-degree angle, then no way, don't even touch it. Okay, you're asking for trouble. All right. And if you're interested in larger time frames, like I said, hourlies, dailies, all that other stuff, yes, indicator supply there. All right, so don't discount it. I know what Dwayne is doing in Logic with the concierge trade alerts and all that other stuff is based on the trade setup on a larger time frame. Okay, that's it. That's a scoop. So every Thursday for an hour, I go over the same thing over and over and over again. Some days it's flat. Some days we're moving. You know, I can show you more examples. This kind of stunk, but you know, it is what it is with the market. I can't make it move. My advice to you would be this: if you're new, hang out in the room, download the platform. Okay, if you're having problems with it, call me. I'm gonna pick up the line. It's just me. Okay, I'll help you download the platform and get your indicators set up if you have to. Okay, if you had Ninja and some other ones, okay, that's do it yourself. You know, you can. That's fine. No hard feelings. Just get the file from Michael and download it. Okay, no biggies. But if you need help, at least it's nice to know you've got a live body to talk to. And then at the end of the trial, you know, then you're going to get an offering from CFRN. And anything you decide to do is between you and them, okay? And I will be here to support you if you decide to use DTPro. And I'm in the room every day. So if there is a hand raise and you want to talk to me on the side, that's fair game too. A lot of times Michael's running around, Dwayne's doing the radio program, I'm at the desk manning the phones. So a lot of times I'm available, okay? So please ask questions because I know, you know, you're kind of scratching the surface here and you're wondering what's going on. So I'll try to give you the real scoop because I've been around too long. All right, so that's it. Every Thursday for 1 hour, you can hang out every Thursday. Okay, I like to see people in the audience and asking questions. So that's it. It's recorded, by the way. If you go to YouTube, yeah, maybe that's what I should do. Hold on. Don't go anywhere. Right? You go to YouTube and go to CFRN Thursday. And I just put in the search. I go over it's all there. All right. You'll hear me. I'm like a broken record over and over and over again. So it's all there. So if you miss a Thursday, just pop into YouTube or subscribe to it. You'll get a pop-up, leave comments, do that, and then you'll be engaged in what's going on. Okay, so that's it. That's a scoop. All right, we'll see you in the morning.